$600,000 range, even lower in some markets, and they're trying to enter the market. But inventory under 600,000 in my market is down over 30%, which is why it remains competitive and why there's still bidding wars and why prices continue to move up.
There you go.
What I'm suggesting, and the what's that?
Go ahead.
And so what I'm suggesting to people is that, you know, I'm having a conversation with people who are like they're afraid to move up. I'm saying, listen, right now the problem is that that my sellers are selling their $800,000, their $1 million houses, their $1.2 million houses, and they're.
We lost David. Right in the middle. It's not just me, right? Show of hands, David disappeared.
$100,000 houses, and we don't see the $800,000 buyer moving up. So I'm here. Can you hear me?
Yeah, you dropped out a little bit.
Hello.
You're back.
Sorry, and what we're not seeing is a $600,000 buyer buying the $900,000 house, and the $900,000 seller buying the $1.2 million house, and so that's creating some of the excess inventory. And so, but now is maybe the best time in a very long time, and maybe the only time we see in a long time, where you could sell at the top of the market and move up, so you can get the better end of the deal when you sell, move up $200,000 or $300,000, and get the better end of the deal when you buy. So you can get the top end of the market if you're selling under $600,000 range, and you can get good value buying into the market at $800,000, and that hasn't been true for a long time, but it is today. So there are two ways to look at it, depending on which way that you know, whether or not you're an investor or you're a consumer. So we're telling investors to sell their high stuff and buy low stuff, and we're telling consumers to sell their low stuff and buy high stuff, because you're getting, you know, the best rate of returns on both.
There you go. Moby. Most investors are making positive cash flow even if they leverage 80% of the property, so it's not hurting them to hold. But most are liquidating problem assets or non-prime properties from what I have seen with my investors. The whole question that I've seen repeatedly on articles talking about a bubble is what the cascading effect will be, whether or not it's the current president and his activities. I'm not here to discuss politics. If there's a decline or a shift. And again, I agree with David and what he has to say. I want to make it clear. I just know that real estate agents have a perception. I know that they've been struggling all summer. I know what they're passing along to sellers. It's not even what's in the printed news or what's even actual. And I've said this many times, David, you and I have discussed this, and I've said it on many of these calls, which is the real estate market is dictated by the perception of real estate agents, whether or not it's actual.
Well, I haven't read the whole article yet. I'm planning to read it today because I'm thinking about sharing it in my sales meeting tomorrow. But it was in a NAR bulletin that said the ranks of real estate agent have increased by 6%. In other words, there's 6% more real estate agents now than there were at some point in the past. I don't know how far, which I find interesting, and because in California, you've heard me say 1 in 95 adults is a real estate agent in California. So everybody already knows somebody. So that continues to dilute it. And I lose listings for two reasons, and you guys might find the same for you, is that I lose them because I'm not willing to price a house as high as the seller thinks their house ought to sell for. And number two, because they can't say no to somebody they have a personal relationship with, no matter how much more qualified they are. I mean, I got a guy right now that said, he said, I got a Sophie's Choice here. I can either choose you, who I think is more qualified, or I can choose my friend who I have a long-term relationship with, and I don't know what to do. And I'm saying, well, you're talking about a $1.4 million investment. Do you really want to leave it to feelings? He says, yeah, I know. I'll get back to you.
Right. I've said this before. Like and trust is probably the most powerful thing there is in real estate. And it's always going to come down to that, whether or not it's, it's actual. We do have actual monster questions today. I'm glad we got that kicked off and underway. I saw that come out yesterday. It was quite the day, especially with all the NAR reports. Let's get back to actual monster marketing. I will make the turn here at the bottom of the hour. So if any of you in the coaching group have any questions, go ahead and type them in. David and I will be happy to answer them. If you have questions about what we talked about, that's our core topic for today. We will also cover coaching topics. For those of you listening to this who weren't on the coaching call, remember the basic steps. Step 1, select 36 homes. Step 2, go out, put up monster marketing. Step 3, go on your appointments. Should be getting about 3 to 5 face-to-face appointments per week for every 36 marketing pieces you put up. I have 42 in the car, David, for the afternoon. All brand new. Defaults aren't going anywhere. In fact, I just got a new property radar report that came out while I was in Florida. The top 10 list is still the top 10 list of people, the weird Delaware, New Jersey, Florida, pockets of California. The default rate is still the default rate. It's still about 3.5%, which is still a really good number to go work. Have you seen any shift on data and pulling as of late?
No, I haven't. I haven't. But well, actually, I have seen some headlines that say that the number of defaults are up, or it's not the number of defaults, the number of delinquencies is up. Right. So it hasn't yet translated into defaults, but it looks like it's coming. And if interest rates continue to rise, these adjustable rate mortgages are really going to hurt. I mean, there's still a lot of people who are converting from interest only to fully amortized loans. They had these 10-1 adjustables, and their payments are going up $1,000, $1,500, $2,000 a month, and it's choking them. My personal mortgage, I just noticed yesterday, it's going up another $300 a month, and I make a good living, and I'm like, damn, what's up? I'll pay it, but it's easy for me to absorb, but I know a lot of people struggle with absorbing it. I mean, I don't want to do it. I'm selling my house anyway, so I'm not sweating it too much. But at the end of the day, this is the time of year people start getting increases in their mortgage payment, and their escrow accounts are getting readjusted and go from there. So I think it's a good time. There's still over 2 million people in default nationwide. Ugh. 2 million people. So there's plenty of opportunity, and there's not many people that are focused on it. But I can tell you, if inventory drops, more and more agents are going to wade back into the distressed property water, because they have to. Competition will. So you want to stay on it. You want to get out ahead of it. You want to cultivate these relationships. And more importantly, you want to be better prepared to discuss alternatives to foreclosure with people in a way that they can understand.
So Daniel writes in, you mentioned being able to get a good property list from a title company a few weeks ago. Can you explain this? Yes. So again, this is niche marketing, especially for you're in Florida. Okay, so this is good for you, Daniel. You're in Florida. It's still legal in Florida to get data from your title representative or your closing agent, I guess is the correct terminology for Florida. We cannot in California get any kind of physical data from our title companies anymore. I know, especially as a developer, this is kind of weird to me. It's considered a RESPA violation. David probably can give you more specifics as a broker and why we don't get donuts and why we can't get data from title reps anymore, other than them showing up and giving pens these days. They can't support events in California. They can't do anything that has a monetary value, for goodness sakes. It's kind of frustrating. So yes. There are basically two ways to get data when it comes to pre-foreclosure. And remember, pre-foreclosure is anything past 91 days delinquency. I think I don't want to get into semantics, but 30 and 60 and 91 days delinquent, anywhere in that time span, there's a cure rate. Okay. After 91 days, just remember this is a 30-year historical fact. 8 out of 10 people, they're just not, people who don't pay, don't pay. I've said it on this call. There are very few things that I say that my dad taught me. The one thing that he taught me early on, which I said, why don't we just rent back to the people that are currently in there? And this is exactly what he said on a foreclosure property. Why don't we just rent it back to the people in the house? His exact words, people who don't pay, don't pay. It's true. It's a 30-year truism, and I have been teaching it for 30 years. People who don't pay, don't pay. So understand that fact. After 91 days at 5 p.m., 8 out of 10 people will not pay again. Doesn't matter what loan mod you give them. Sure, they'll make partial payments. They should have been saving it up. We can get into a big, long discussion about it, but they just don't. So title companies are just a little slower with their data, Daniel. Property Radar and Realty Track seem to be a little more up to date than everybody else, or get the information quicker from a public standpoint. I guess the fastest way to get it would be to go down to county records and grab it there, but I don't know what that would be like city to city, county to county. So David and I and Diana, people who run this program, we use Property Radar and Realty Track. That's what we've been recommending for 8 years. We've tried other companies, RedX, you name it. We've tried all the other companies out there. We've been disappointed by other companies. Realty Track and Property Radar consistently just seem to be the best way. Now, if you want to be guerrilla and be on the East Coast, or you don't have RESPA violations, why wouldn't you just get title from a title company? It's how I used to get my info. I think it'd be a little behind the times, but we haven't had a title company in so long, David. I don't know what their data would be like today.
Well, I don't know. That's not where I get it. I don't, the data is so inexpensive. I mean, just Property Radar, I don't know, what is it, $49 a month? It's not a big deal.
Yeah.
I mean, it's only expensive if you don't use it.
Yeah.
I mean, if you're paying for data and you're not tagging, then it's expensive. You need to cancel it. But if you're tagging every week like you're supposed to be, it's a bargain. So, that's the way that I look at it. I mean, those are the only two sources I recommend. I definitely recommend you stay away from Rebo Gateway for distressed property stuff. Yeah. I mean, Rebo Gateway is probably great for divorce and probate, stuff that's not as time sensitive, but they just don't update their data frequently. They update their data manually, and so they're always behind, where the other ones have a more automated, more current process. And I find Realty Track and Property Radar both to be on top of their game.
We have had a long historical fact of having issues with Rebo Gateway. For those that have been on the coaching call, no knock on Rebo Gateway. I think they give I'll say this because we're going to now use this as a podcast, right? So it's kind of out there on public airwaves. It's no slander on Rebo Gateway. I just think that their data is a little bit older, and they do have other services that they provide. My opinion, they're just way behind I'm with David on this. There you go. So go out and put up tags today on that topic. And James Bodie writes in, after getting an appointment, I go to the door. If there's no answer, should I leave the package or request them to reschedule? My answer is this. And I'll share a story with what happened with Kevin before we went on vacation that was unbelievable. I like to retag it if they don't answer, James. That's my answer. I prefer to put the tag back up and again put the monster marketing piece on the property and let them call back in. If they called once, they'll call twice. David, what do you tell your people if they don't answer the door?
If they don't answer the door,
yes.
Call them. We call them and leave a message.
Okay. There you go, James. Two different options.
And we leave a tag saying second attempt.
I like that. And you'll love this one, David. So for those of you who don't know, we run a team here. There are 3 people to my team. David is a full brokerage with his office, and he has many people running and doing the monster. Here, it's just 3 of us. It's me, Diana, and her brother, Kevin. Kevin is an investor, and I am a grunt. I'm just told to go do stuff. Kevin had an appointment, and this is exactly what the person told him, David.